Hi everyone, I'm Karunya Rao, and on Ideas for Profit today we tell you why investors could consider accumulating the stock of the country's largest automotive wiring harness company, Motherson Sumi. For starters, it posted a strong set of numbers for the last quarter of FY21. Most of the business segments saw significant growth on a YOY basis. The operating margins also expanded across many segments. If you look at the current price, Motherson's valuation of 36.7x of FY23 projected earnings is at a premium to its long-term average. But there's definitely a significant impact of pickup in demand, which is visible in Motherson's consolidated revenue, which is up 17.6% YOY in the March quarter. The growth was driven by comeback of its standalone and domestic wiring harness businesses on the back of a strong recovery in demand for passenger cars and also an increase in content per vehicle due to BS6 norms. The operations of its subsidiaries also did well. PKC reported a revenue growth of 18.8%. SMR, however, was flattish in terms of sales, and SMP's business grew close to 6%. What surprised us is the operating performance. Despite multiple headwinds like chip shortage, higher commodity costs, the company sustained operating profitability. EBITDA margins expanded 154 basis points in the reporting quarter compared to Q4 of FY20. What helped the overall margin is SMP business, which reported a margin expansion of 420 basis points. Standalone and domestic wiring businesses as well posted margin expansion, 70 bips for standalone business and 210 bips for the wiring harness business respectively. There's definitely uncertainty regarding supply chain and demand because of severe second wave of COVID-19. The first half of current fiscal on back of that is expected to be muted. Recovery is expected only in the second half. However, we feel that the localized lockdowns because of second wave are expected to increase the pent-up demand for the products. High pent-up demand, preference for personal mobility and first-time buyers would continue to lead strong demand for passenger vehicles. Other factors that are expected to contribute to rise in demand are lower interest rates, easy financing and a pickup in economic activity post-waning of COVID impact. And with good agri production and a normal monsoon, management expects sentiment to remain positive in the rural markets as well. Being one of the largest players in supplying components for passenger cars, Motherson is likely to be one of the major beneficiaries of this trend, and it's also well placed to garner a bulk of the increased demand. Situation in the global automobile market has improved significantly, with demand for cars picking up across many geographies, which was clearly seen in Q4 numbers. Management has indicated that demand for Class 8 trucks in North America is returning strongly. These trucks, do remember, contribute more than 45% of PKC's revenues. PKC is also focused on the truck market in China, which too, by the way, is showing a strong momentum. What could also act as a key driver for the company's margin expansion is the operating leverage in SMP's greenfield plants. Management also highlighted that these plants are just above EBITDA break-even, and also over the medium term, they're expected to operate at average margin. Meanwhile, there's been a strong order flow for electric vehicles too. In fact, SMR PBV's order book now has 25% orders from EV manufacturers. They are a supply to 4 out of the top 5 EV models being sold across the globe. Overall, at the end of FY21, the company had an order book of 15.6 billion euros. According to the management, the sharp uptick in order book reflects normalization to pre-COVID levels. On the other hand, however, the company is getting affected by constraints in supply of electronic control units, also known as ECUs, owing to non-availability of semiconductors. Management says OEMs can face supply constraints and may cut down the production, which in turn could impact the company. However, management has said this is short-term in nature and inherent demand continues to be very strong. At the end of Q4 FY21, Motherson's net debt declined to 4,820 crores compared to 6,200 crores at the end of Q3 FY21. Its net debt to equity stands at 0.38 times, which is at a comfortable level. At current price, the stock is trading at a 10% premium to its long-term average valuation of 33.2x. We advise investors to accumulate the stock on dips with a long-term view. Any slowdown in demand both in the domestic and or the global markets could impact the performance of the company, however. Any adverse movement in raw material prices could also hurt Motherson's profitability, so important to keep an eye out for those factors as well.